Right, this is the time where people are looking at bargains, and buying bargains means sometimes going into the auctions and having a look at auctions. But there are different ways of auctions now. The traditional auction was like, buy a property within 28 days, you have to complete on it. But now there's the modern method of auction, which is a 56-day method of auction, which opens up a little bit more options when it comes to financing and getting mortgages, traditional mortgages, rather than going down the bridging finance route. So in this video, we're going to talk about the modern method of auctioning, buying properties in auction, some of the downsides, some of the good points. So it's all about what are we going to do? How are we going to bag a potential profitable property in this current environment? So let's talk about it, and I'll catch you on the video. Okay, so we're going to see a lot more properties come up for sale. There are many reasons for that, but one of the biggest ones is because landlords are trying to offload some of their properties. Generally, it's the properties that have got problems initially. They don't have good rental yields. They may need a lot of work doing to it. So I predicted this last year when I made a video about 12 months ago now, saying, look, what you're going to see with the rates, as people come off low rates, you're going to look at and stress testing with the landlords and how underwriting is done. You're going to get these landlords that have got 5, 6, 7, 10 properties potentially, or maybe 2. And they're going to look at this and going, well, it doesn't really make sense. I own this in my personal names. I can't offset a lot of the costs. There's a lot of work to be done on the property. It needs work done to it. And I can't do that. I might be able to do that for 2 properties, 3 properties, but I can't do that for 7 properties. So what are they going to do? They're going to start selling those properties. But what would happen is if you were someone who was going to look at a property, you look at your property portfolio and go, well, actually, that's doing well, that's doing well, that's doing well, but these 2 are not doing that so well. So let's try to offload those. Okay, so this is where we are now. And I think this is where we're going to be for the next 6 months to a year. People are going to offload properties that are not performing very well. Now, that doesn't mean they're not good properties. It doesn't mean they're not going to hold their value, but it means there's issues there. Now, it could be structural issues. It could be legal issues, lease issues. So you're going to see a lot of, for example, I've seen a lot of properties come on the market with lease problems, short leases. So there are reasons why people are putting these properties in auctions, and there are 2 methods of auctions, as I've explained. There's the traditional auction, which is auction house, goes to the auction, you've got to complete it within 28 days or 30 days, you've got a set time, and generally what happens is you buy that on auction finance. You still got to be careful because those properties potentially have got problems, okay? And a lot of people historically have put properties without a problematic in auctions because they just want to get rid of it and they want to have a guaranteed buyer. So you've got to be careful here. I'm seeing more and more inquiries from what I would say is non-professional people trying to get into this sector because they've seen lots of YouTube videos on how people do it. And you've got to be very careful around this, especially when you're dealing with properties that are non-standard, maybe lease issues, maybe trying to do conversions. There are all sorts of pitfalls. But in this video, we're just going to talk about getting a mortgage. Now, this would not be normally a case, but getting a mortgage on a modern method auction property. So you've got 56 days to complete on it. So what are the good points and the bad points? Well, one of the good points is obviously hopefully you're going to get a good deal. The bad point around that is, and some of the points is the legal pack's already been done. Some of the searches have already been done. So they're moving on things. And I've actually just done a mortgage for a client who's buying it in that way, a modern day auction. And I've got him a normal residential mortgage. But there are issues around that, guys. You've still got 56 days to complete. And many of the lenders, there is no guaranteed. So the lender's service levels are going to be the key. The solicitor's service levels are going to be key to be able to do this. And the property has to be habitable. So point number 1, property has to be habitable, okay? There's no point going there, there's no kitchen, no bathroom. It's not going to get a mortgage, okay? It's got to be in a state. And there is 2 faults. Let's talk about the residential as well as the buy-to-let aspects. So if you're going to buy it to live in, that, in my opinion, is more straightforward, okay? Because the valuers will take an element of, oh, I will put a new kitchen in, and well, the kitchen's a bit battered, but I will put a new kitchen in there. I will do some decorating. It's going to be a residential. So there's a little bit more leeway on that. However, if you're going to buy this as a buy-to-let, there are more pitfalls within that. First of all, this is not a method that you would do. You won't go down a mortgage route if you're going to add value to it. So I'm going to buy it for this, I'm going to do this, and I'm going to do that, and I'm going to get it valued at this. That's not really where this is for. It's really for properties that are habitable, and you can do a light refurb, very, very light refurb, and get it out there. So, and I think some valuers will understandably do that. But if you're going to go down a buy-to-let route, remember the surveyors going there and saying, what is this property going to rent right now in its current condition? It's not, oh, I will do it up and it will be worth this and it will be doing this. If that's the case, you've got to go down the bridging route or the light refurbishment route type of product. And there are products out there. So on a residential front, and the client that I've just done, and he's got his mortgage offer and he's going through legals, it was, look, I'm going to buy it as a residential. I'm going to live in there and this is what I'm going to do. So in that case, we got him a normal residential mortgage. I think it was 85% loan to value. So, you know, a normal mortgage could be sought after for that, as long as the property is okay, as long as you've done, and there are certain things you need to do. Obviously, it's a higher risk method. You get your own survey done with a RIC surveyor. You do a full survey. You find out if there's any problems with it. The last thing you want is a crack down a site and there's a problem and the property's not the property's not mortgageable. And often the mortgage lender survey will not spot that. The mortgage lender survey is really the mortgage lender sending their own surveyor saying, right, it's got it's got the window, it's got a door, it's got some bricks on there, it's got a roof on there, and it's in the right vicinity, so we think it's worth this. But they're not going to check things. And a home buyer survey will do some checks, but a full building survey will obviously do a lot more in-depth searching. So if you're going to do that, you've got to fork out. Some of the costs that I would do on an auction property, whether you're going with a modern day or the other, is get your own survey done. Yeah, it will cost you, because if you lose the property, you've lost that survey money. 2, I would probably instruct a solicitor beforehand and do some due diligence on the legal pack, especially if it's a leasehold and things like that. So there are solicitors out there that will charge you a couple of £100 pre-auction or during the process, and they will double check the various things around the titles and give you relevant advice. And remember, when they give you the advice, it's covered by their professional indemnity insurance for that advice. So do it properly. See it as a professional way of doing things, okay? It's not just, it's not good taking your uncle who's a builder around and goes, oh, that gives us the okay. Or give it your mate who used to do paralegal in a solicitor firm to say it's okay. So I would be very, very cautious around these deals, especially, as I've said, the ones that you're going to get right now are not the cream of the crop. Okay, there are going to be problems with it, and that's why they're going to auction. Why do you think they're going to auction? They want to sell it quickly. They want to get rid of it quickly. Okay, and there are other reasons. So I saw a flat for auction, and I inquired about it. It had a short lease, so we had to get the lease looked at. But the auction house themselves were charging £6,000 minimum. I think it was like a 6% or £6,000 fee for the auction. So if you think about it, and it was a low value flat, so they're making quite good money out of this, and they'll probably get that tied up with the estate agents, and the estate agents have got a profit share with the auction house. So there's a lot of properties coming in, and sometimes on the low value properties, it makes sense for them. They'll make more money on an auction property, and then they've got a higher chance of it selling. So be warned around that. What are the advantages? Obviously, the advantages is you can get it done quite quickly. Which mortgage lenders offer, so I've done this article, by the way, this is on our website at Niche Advice. I'll leave a link below, and I've run through some of the questions in there. So which mortgage lenders offer mortgages for 56-day auctions? Well, pretty much in theory, all of them, as long as the property is habitable, and the key is how quickly can they go to mortgage application to offer. So mortgage application, survey, offer, legals, because you need that to be really, really quick. And obviously you need to have the right solicitors that know about this and be able to proceed quite quickly. So you're not really restricted, but you've got to go with the right lender, and that's where advice comes in, and obviously mortgage brokers will have that insight. Does the state of property matter? Well, we touched on this. Yeah, it needs to be mortgageable. You can't buy this and say, I'm going to do this and I'm going to do that. Tomorrow I'm going to be a millionaire. Tomorrow this is going to be worth £1 million, but I've paid 50k for it. So you can't do any of that. I'm looking to buy a property I've seen in a bargain in auction. If you're looking to mortgage lenders, factor in the future value. Right, okay, yes, the future value things and refurbishment, and I'm going to do this, and I'm going to put 2 extra bedrooms on there, and it's going to be under permitted development, then it's going to be extended and all of that. There are products out there for it, but it's not a mortgage. Definitely not a mortgage, okay? Should I get my own valuation ahead? Well, I've already talked about that. You should. Are mortgages cheaper to buy auction properties with rather than bridging? Yeah, of course. So where this is good is if you can get it under a mortgage. Obviously you don't have the hoops of getting it bridging finance or a light refurbishment product and then putting it onto a mortgage, and that could save you quite a lot of money. Bridging lending could be from anywhere from 0.7% to 1.25% a month. Lending fees are around 2% a month, so that could add up. That's expensive. The legal fees are double generally, the survey fees are double generally. So if you can get away with getting a mortgage, then I would try it. But it's really, really important what you're going to do with that property. Can it be let out straight away? Are you going to move into that property? For example, if it's a residential purchase, then that falls under the regulated environment, which means it falls under the FCA remit. It's for your own personal use, and there are guidelines around that. And there's not that many lenders that will lend from a bridging perspective on that. Obviously, a mortgage is a regulated mortgage for residential purposes, so it's a little bit more different than a commercial buy-to-let, for example, transaction, which is for commercial use, which is essentially you're not living there or a family member is not living there. Let's talk about some of the plan A and plan Bs you need to have in place. Right? On the residential front, let's assume you're trying to get a mortgage with 15-20% deposit. Okay, so you're going for the modern method, 56-day auction. We're trying to get you a mortgage, a residential mortgage. You're going to live in there. You've got 15% deposit, right? What happens? And you're committed. So you've put some fees in there, and you're committed. You put some deposit down. What happens if you can't get a mortgage? Now, bearing in mind, you're limited with time frame. You can only really go with one lender on an application, otherwise 1 or 2 lenders maximum, because you need to complete within 56 days. So if lender 1 comes around and says, I don't like the property, or there is an issue, then what are you going to do? So the plan B is really trying to get auction finance or bridging finance. Great, that sounds good, doesn't it? But deposit amounts vary. So traditionally on a bridging finance for residential purposes, it's probably going to be about 25 to 30% deposit, right? So, and then you've got fees and things like that to take into account. The interest is normally taken up front, so that comes off your day one. So you could end up being 30 to 35% deposit. Do you have that? Have you got that to call up on? Can you get that from mum and dad? Can you get it from another property you can refinance? Those questions need to be answered, or you need to have a think about this. What's your backup plan if things don't go to plan on a mortgage? Okay, so it's all great me saying I can get you a mortgage, but what happens if it doesn't happen? All I could turn around and say, well, actually, the mortgage lenders surveyor said no, or you don't fit the criteria. So backup plan. If you're a buy-to-let landlord, if you're trying to do this on a mortgage, valuer goes around there, you think it's going to rent out for £1,200, valuer goes and says it's an actual dump, we're going to rent it for, I don't know, 900. Okay, now all of a sudden your loan amount has been reduced because they work on the rental income. Okay, let alone the valuation of the property. So what are you going to do if you're short? Can you get that from somewhere else? Remember, you've got to complete within 56 days. Can you pull the money out from somewhere else? Have you got access to cash? Can you do this? Can you make this work? So backup plan. Plan A, plan B. Plan B is generally auction finance, bridging finance, refurbishment finance, things like that. But that's why I think these type of methods, it's really for a freehold, okay? Because leasehold, if it's a lease issue in this, 56-day auction's not going to work, right? So bear that in mind. Bear that in mind. It's very, very important. Let's talk about the disadvantage of these auction methods. Obviously, there are auction fees, and you're putting deposits down. The stamp duty is calculated including the reservation fee, so there's additional fees there. You're committed to the purchase, and if you lose, you can potentially lose the fee that you've paid. The final purchase is unknown. Obviously, it's going to an auction, and that's the whole nature of it. The timescale is inflexible, so you haven't got lots of options around that. So again, that's important around this. In terms of, let's have a look, see if we've got any more questions around this. Yeah, I mean, the legal pack's a big one. You need to understand and give yourself some I suppose you need to really look at some of these legal packs, different legal packs, see what's in there, see if there is, look at the drain and sewage reports, look to see if there's any issues around it. Be warned of properties, be aware of properties that are non-standard. They're next to commercial, they're opposite a commercial, they're above a shop. There's, all of those things are problematic issues that mortgage lenders do not necessarily like. Bridging lenders are okay with it in most cases, as long as you've got to find, with bridging it's a little bit different, because bridging lenders are okay with it as long as you can tell them that there's a buy-to-let lender that's willing to do it. I just had an inquiry this morning actually, and the person was looking to purchase a property via bridge, and then get the lease extended, and wanted to come back to us, buying it at a certain price, paying for the lease, and then looking to obviously exit out. But it was above a commercial, they had all sorts of problems, and I literally said to that person, you've probably, if there were risk factors, if there were 5 risk factors, you've hit every single risk factor there. So make sure you've got a backup plan. And unfortunately, within this day and age, you only have to go on YouTube and you have to click in, and people will tell you all sorts of things that they're doing, but they're not telling you about the downsides. So yes, this method works. Yes, there are people going to buy in this method, but you got to make sure that you've got your backup plans covered. And like I said, we have in the past and are doing mortgages under this method. I think personally it's quite a suitable method for residential purchases, as long as you can come up with a big deposit, because then that you're covered from both things, because we can run the backup plan as in parallel. Once I have your documentation, we can run the mortgage and the backup plan, just in case if things don't work out, you can complete on things quicker. Anyway, there are lots of people that are buying this vehicle. Let me know if you are someone who's purchased a property through an auction, whether it was a 56-day auction or just your traditional method auction. Some of the, it will be useful, I think, for everybody, some of the challenges that you've come across with legals, with extensions, for example, with the mortgage or financing facility, with bridging finance. Share it within this community. Look, use the comments below. Let me know what you guys think. Let me know whether you would consider purchasing a property via the modern method auction, the 56-day sort of auction, and if this is something that you think it's going to be more prominent. I honestly think we're going to see more and more and more of these come up as uncertainty kicks in with some of those properties. But yeah, always ask your question, why is that property going to an auction? I think that's the first thing you should start with. I'll catch you on the next one, and hopefully I'll see you in the comments. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.